I come back to this because it reminded me of the video I made a couple weeks ago. Bagsy tweeted out, he's not wrong, which is why decentralized options will rule supreme for those who give a damn about their privacy. And he responded, retweeting my tweet when I said, everything will eventually need KYC. There will come a time where moving funds to unverified exchange accounts will blacklist that address. Once governments drop the hammer, blockchain makes financial control easier than ever. Be careful out there. This is all still relevant. All right. I followed up with him. He was saying that there's ways around and this and that. But I said, what's your way around if they blacklist your private wallets that you're using to access the DEX? What if they blacklist the actual addresses of that DEX? There's nothing you can do in that situation. You can't. All right. So what will happen is your money that you're using to trade on there is going to get blacklisted, period. And then you're going to have to verify your identity. If that exchange is ever allowed to continue on, you're going to have to verify your identity on that before you can even get access to your crypto once again. And if your own private wallets get blacklisted, then you're going to have to verify those as well. We're coming to a world where your crypto private wallets will have to have your own digital identity tied to them. All right, this is inevitable. All right, everybody, welcome back for another one. And I wanted to start this video off with a trip down memory lane to let you guys know that, at least for me and on this channel, it's nothing new, right? The idea of exchanges eventually being required to have KYC essentially on all the wallets that you're withdrawing to. So for me, it's a matter of when, not if. Those kind of regulations are coming. Crypto and blockchain is perfect for it. It's perfect for implementing more financial control. That's what people don't understand. It's kind of ironic, to be honest. Like, crypto was supposed to be like this, free new monetary system, the people's money kind of thing. I think it's going to turn out to be exact opposite of that, to be honest. It's going to be total financial control. I'm not saying that that's what I want to happen. I just think it's a reality at this point. All right. But a lot of action unfolded over the one day that I suggested I was going to take off, being yesterday with Thanksgiving, and didn't put out a video. But yeah, so obviously there was a big dip in the market, a lot of price action. And I'm going to get into that a little bit later on at the end of this video, what I think is going to unfold next. But anyway, supposedly the market dip is being blamed on this tweet by the CEO of Coinbase, Brian Armstrong. Okay, so let's take a look at it. Coinbase CEO concerned at possible new KYC regulations. Could new regulations require Bitcoin and other digital asset transactions to be sent only to ID verified wallets? That's what Coinbase CEO Brian Armstrong appeared to suggest, based on rumors he had heard. Though it's hard to see how such a law would work, it's a reminder that governments remain very keen to track all digital transactions no matter what platform they're on. Armstrong didn't mention where he'd heard the rumors, and therefore no specific details are available on the reportedly proposed regulations and what they would or wouldn't allow. He did offer some opinions based on the notion that Coinbase and similar companies would need to verify recipient addresses before performing a withdrawal, even if the address belonged to a self-hosted wallet. All right, well, CoinGeek, whoever this is that wrote this article, John Southhurst, says, it's hard to see how such a law would work. Well, no, it's very simple, actually. I've showed you guys before, talked about it in that clip, and I'm going to get into it a little more now. All right, but if you guys want to read all the details of this tweet, go ahead and check out at Brian_Armstrong, and you can see what his idea is that's coming. So anyway, so it's hard to see how such a law would work, huh? Well, let me show you. So first and foremost, Hedera Hashgraph is an easy example of how this would work. All right, if you use the Hedera main wallet, their actual wallet, so you have to download it on your browser or on your mobile device or computer, and you go to this portal.hedera, and when you go there and set up your wallet, you have to pass KYC just to even set up the wallet. So Hedera is an example of one that already has something like this. Now, if you have a Ledger device, they could make it so that Ledger software requires you to have KYC for your Ledger on your computer. If you don't think they could do that, I don't know what to tell you, because they could. And then all these other wallets that come out in existence, they could do the same. I don't know exactly how they would implement it, but it can easily be done. Right there in the Ledger device, they could have you required to put your ID in. What I think is coming is going to be a digital ID. I don't know exactly which platform we would have to use, but I'm assuming there will be one linked to your Ledger wallet eventually, something like that. And then you also link that same ID to your Coinbase account. And all the DEXs or whatever that Bagsy suggested in that clip I shared, those would just get outlawed. If you don't think they can do that, I also don't know what to tell you. And another way, so looky here, as I've showed you before on the Stellar website, if you come over to this page, The Power of Stellar, they talk about what Stellar does. So on Stellar, you can issue your own assets. Stellar lets you digitize value and then issue and redeem claims on it. The platform was designed for stablecoins before stablecoin was even a word. As I've said before, USDC is on Stellar now, and I think that is the United States central bank digital currency, personally. They're just disguising it. And let's read. By default, Stellar tokens can be seen, held, and traded by any user, but they are highly configurable. If you have specific compliance needs, you can, for example, require that any holder of your token pass your KYC program. You can enforce Reg D ownership requirements for your token. You can control access to your tokens via multi-signature accounts, and you can create time-locked escrows for any account or asset. So Stellar already has this implemented on their platform, the ability to require KYC. It's no coincidence to me that USDC is now on Stellar. This is what they're doing. They're playing chess behind the scenes. They've already built all the platforms that they plan to use for the future, which is going to be XRP and Stellar mainly, I would assume. The Ledger wallets will require KYC to use. The exchanges will require you to have your KYC Ledger wallet linked to the exchange if you want to actually be able to withdraw. I mean, this is what I see coming. Like I said, I don't think that this is what I want to happen. I wanted this to be for the people kind of thing, but it's pretty obvious that it's not going to be. So, and this is how they'll do it. They'll just force you to use platforms like Stellar and XRP that have KYC. I don't know if the XRP Ledger has something like this, but I would not be surprised if it does. I just found this on Stellar's website, so we know Stellar does, which is created by Jed McCaleb, which also created XRP. So, all right. And another one, if you don't follow this guy, George Gammon, go ahead and check him out. He makes some good videos. Rebel Capitalist Show, I think it's called, on YouTube. Talks about government control and finance and stuff like that as well. But anyway, he tweeted, "In a time when the government has locked its own citizens in their homes, shut down businesses, forced people to wear masks, can we seriously assert the government would never ban Bitcoin or gold?" I mean, really, can you ask yourself that? In a time like this, when everyone's completely controlled right now, they found a way to implement it, didn't they? Destroy all these small businesses and so on, and everyone just goes along with it. So they can do whatever they want. Sad reality. All right. So if you didn't see, Pompliano did an interview with Brad Garlinghouse. Go ahead and check it out. It's definitely worth a watch. It's just funny how oblivious Pomp remains. It's crazy. I don't get it. But anyway, my tweet. Pomp's face looking like a kid lying to his mom about something he did and knows damn well she knows. And Brad looking like mom already knew the answer and just wanted to see if their kid would lie. All right, check this clip out though. Let's see here. This is funny.
Okay, well, let me ask 2 questions.
Okay.
Do you think the Chinese Communist Party could, if they wanted to, control those 4 miners?
No.
Huh? What did you say?
Okay, well, let me ask 2 questions.
Oh man, go watch the whole video. It's definitely a good watch. But they kind of talk about how Bitcoin mining is controlled. Well, Brad tries to tell Pomp that, and Pomp just denies it. Come on, man. I don't get it. I really don't. Just accept it. All right. And in other news, somebody asked me in the comments about if I don't like any DeFi at all. I don't know about all of it, right? But to me, I think that the term itself is misleading. Because what is DeFi? DeFi to me would be any decentralized crypto project that is working on something financial, which is mostly all of them. So DeFi is just crypto, right? So the stuff that I don't like about DeFi is stuff like this article. Let's take a look. 100 million liquidated on DeFi protocol Compound following Oracle exploit. Lenders on decentralized finance protocol Compound on Thursday got liquidated for a massive 103 million, according to analytics provider LoanScan. This happened after what appears to be an Oracle exploit on the DAI stablecoin. An apparent error or malicious attack to the DAI dollar peg data supplied by the Coinbase Oracle pushed the price of the stablecoin to about $1.30, a premium of 30%, leaving some users on Compound under collateralized. Compound gets its pricing data from Coinbase Pro. Now, once this happened, and based on the built-in protocol rules, this could only mean one thing: forced liquidation of the borrower's position. All right, so I just wanted to talk about this article because it fit perfectly with that question that was asked. So pooling money together on these new lending platforms and, stuff like Yearn and Uniswap and Compound, obviously, this is why I've been telling people to be cautious because they are new, all right? So people are just going and just throwing money into smart contracts on stuff that is not proven, okay? And this is exactly why, something like this was bound to happen, and it did. People lost money, and that's that. Right? So, and also, no, I don't like any DeFi project that you're supposedly going to lend out your crypto and you're going to get 1,000% annual returns. If it's something like that, it's clearly a Ponzi. I don't care who you are or what your opinion is on that. It is, okay? 1,000% returns on lending is extremely unrealistic, and clearly there's something going on. So stuff like that is the aspect of DeFi that I don't like. Of course, I like anything crypto related that is DeFi that works and functions. But I'm saying be cautious, all right? Because I don't know. I don't see the point in locking up billions of dollars on something that just came out, personally. But anyway. And this is also an example of exactly why I laugh at people that suggest something like Nano or any of these cryptos that just came out are like the future of finance. Don't you think it might be something more along the lines of the XRP ledger, which has been around since 2012, clearly tried and tested? Something like Stellar that's been around for 6 years. Probably both of these platforms have been tested over and over and over by financial institutions and governments, right? It's not going to be some random crypto that just comes out that takes over the world. Not in this case. If you're building out a new financial infrastructure for the world, it's going to run on something that has been tested for years. All right. And looking at the chart, this is the DAI chart. So this is, for those of you that don't know, DAI runs on the MakerDAO protocol, I guess it is. I don't know. But anyway, DAI is supposed to always be pegged to $1. Clearly it wasn't at this point. Ran all the way up to like $1.34. Crazy wick right there. I saw that the other day too, and I was just thinking, man, can you short DAI? Because that's guaranteed to go back to $1, right? It's the most obvious move ever. So, but anyway, that's what happened, and that's why I say, you know, I don't like DeFi. All right, anyway, some TA to finish things off. So before that dump yesterday, I was showing you how we had this bull pennant going on in the XRP. That doesn't mean it has to break out bullish every single time. It doesn't, but it was there, and that's how you do TA. But anyway, it can break up or down, and as you can see here, it broke down. But I also think that this is kind of fitting for exactly where we're at, and even historically. Once again, remember how I said XRP is pretty much like a giant fractal, right? Well, I'm going to show you that it still is. So look, what did we do here? We broke above this major resistance point that we've been fighting repetitively. We've hit it over and over. One time there, 2, 3, 4. All right. Then we blasted through it and came back and are finding support on it right now. So what did we do historically? We did the same exact thing. We blasted through the previous resistance. 1, 2, 3, 4, 5 touches. Blasted through it, found support, and then we continued up. So I think, once again, where I've marked, you are here. That's what it looks like to me. We'll see how it plays out. These charts just look oh so similar every time. Makes perfect sense to get a little pullback and some consolidation here. But we could continue up. I don't care either way. I'm not trading in and out of XRP. XRP is a long-term hold for me. All right, at least until end of next year. I'm trading it based on time frames and not specific dollar prices, because I, just like everyone else, have no idea how high this thing can go. If you think you do, I don't know why, because we don't. We don't know how high they can pump this thing. So we'll see what happens. But for me, into next year is the time frame before I want to make any major moves. All right. I might trade it some if we get to a point where we get something like this formation. So run all the way up and clearly are stabilizing. I think that could happen somewhere around the $10 range. If we are stabilizing for, what was this, 213 days straight, it might not hurt to, you know, invest in, you know, take some of the funds and buy something else that could go up. But we'll see. All right. Once again, fractals playing out. I think that we are right here. Maybe not. We'll see. All right. And with Bitcoin, I've been calling for a pullback. We got the pullback. Everyone's been blaming the news of Brian Armstrong saying that exchanges going to require KYC. But I think that the pullback was just overdue and we got it. So, and once again, history, I don't know why. Maybe because this is like programmable money, but history just repeats and repeats and repeats. And here we are once again. Like I said, ran all the way up to all-time high, touched it, and then we got, hold on, let's zoom in here. We got a roughly 38% pullback. All right, And then we bounced and continued up, tried again. I told you it's going to be a fight to get over all-time high, but once we do, off to the races. All right, so we got the 38% pullback there. 38, let's see where 38 takes us right here. Probably going to take us down to the moving averages. Yep, look at that, exactly. 38% takes us down to the 200 moving average on the daily, and I think that we could see something like that. It makes perfect sense. It's just how it works. Look, it even worked like this when we hit all-time high. Look, 38%, I bet you. 47. Yeah, somewhere in there. So we hit all-time high, had a big 30, 40% pullback, and then, you know, bounced around, and that was the end of that. But now we're going to get the 38%-ish pullback and a continuation up, all right? Like I said, I don't know why, but it just repeats itself over and over. So here we are. Don't be surprised if this pullback takes, let's see how long it took last time. It was 2 weeks of retracement, 2 red candles before we continued up. So this candle ends the 30th. And so don't be surprised if next week is also bearish, and that's the week we get more retracement. And I don't know, I would expect only like 2 or so weeks of selling off and then continuation up. As I always say, I could be wrong, but this is just how I see the markets, and I trade them accordingly, and it works more often than not, okay? Because crypto is so cyclical, it's crazy. All right. Once again, that about wraps it up. As always, please like and subscribe, share with your friends and family, and stay tuned for the next one. Thanks.
What is a cashless society? What does it actually mean in a literal or high-level sense?
Money will become like these, relics of a different age, and will only be found in places like this. In other words, hard cash will disappear. It will become electronic, transferred by things like these.
Then Tracy is in Beijing to show us what a nearly cashless society actually looks like. Ben, good morning.
Mobile payment transactions in China reached a cumulative total of 277.4 trillion RMB in 2018, ranking #1 in the world, according to the recently released statistical report on internet development in China. As of June 2019, online payment users in the country reached 633 million. The cashless society is now approaching.
When's the last time you paid with cash? Well, chances are cash has taken a backseat to the plastic in your wallet and smartphone pay apps.
Denver 7's Ryan Luby explains the digital pay revolution and why not everyone is on board.
The cashless society, the cashless society.
The cashless society.
The cashless society is now approaching.
The cashless society.